everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, August 30th, 2012. Well, a change of trend again today to the downside. Previous day's trading we had a change of trend to the upside, and prior to that a change of trend to the downside. Those previous three trading days were, as noted yesterday, on spinning top candles and a lot of indecision in the market, and I highlighted this strong support at the roughly about the 1407 level. It was previously strong resistance, and today the market's taken that out in a very bearish manner. This market was set up for that potential change of trend because of the indecisive candle, but the trend could have really broken either way. We had very strong resistance above where the market was trading around 1416 or so, and then at this level around the 1407 area. Very large black body candle today. The sellers have really built some good solid momentum for the trading day today, but the market has interacted with this zone of support around the round number 1400, and that has been a very strong area of support and resistance for this market. We can see here where the market probed below there on 4 or 5 occasions, and then in the recent past we tested 2 there and just below. Today tested just below. Now this zone of support extends all the way down past the 1395 area, down roughly to this 1391, 1390 area where we have this swing high, and it's a level that we should see the market finding some genuinely solid support, but all the way through this zone we could see the market find support. If we do see a bearish close down below this 1391, 1392 area, then there is a strong possibility we could quickly see the market testing down to around the 1380 levels, where we should find some more strong support. Now, just looking at this trading through here with this large congestion area, some people may think that we had a head and shoulders pattern set up with a left shoulder here, a head and a right shoulder. It does look that way just glancing at it, but if we have a look at the detail in this area here, there actually isn't a peak that defines a technically a left shoulder. We actually have a high here in this area, but we don't actually have a change of trend to the downside to form a peak. So we have a continuous uptrend all the way through this area. So no, technically no head and shoulders pattern, but really, to be honest, the effect is the same. We had this congestion here, and we had tests down below this zone, and we could potentially draw a neckline down through here, and we may just have a close through the neckline and a bearish close. So there is potential for the market to trade down 26 points lower from this 1400 area, and that would give a target roughly down around this area of support around the 1380, 1378, 1376, 1374 area. Now, in terms of the Fibonacci extension, and now that the market is trending down and in a very bearish manner, we have we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and in one go with all of this bearishness we've traded all through the 50%, 61.8%, 38.2%, 100% levels in a very bearish manner. But the market did find some support at the 161.8% level, and that could be significant. That was at 1396, and we can see we traded exactly to that level, and there was some price rejection, but still the sellers have closed with control of this market, and it does suggest that there is potential for the market to trade lower and test even possibly down to the 261.8% level at 1386. But we do have very strong support before the market trades to that level. But looking at the Fibonacci retracement, and we're examining the relationship of the current downtrend to the prior uptrend, and we're now in an expansion mode of that. We've traded all the way through the 100% level, and the market has had a bearish close below the 161.8% level at 1400. So there is a possibility the market could test down to 1392, the 261.8% level, and that coincides exactly with the top of this swing high. So very solid support here with the confluence of those areas mentioned previously, and with the Fibonacci retracement area. In terms of Ichimoku, this market remains bullish in the long-term time frame and the medium-term time frame by trading above the cloud and above the Kijun-sen, the pink line here. But now this market is really established with a bearish bent by trading once again down below the Tenkan-sen, the green line, in the short-term time frame. It's been about half a dozen days or so now that we had the market trading below the Tenkan-sen. We had the solid bearish breakout that found support at 1400, a retest back up to the Tenkan-sen, and the market found resistance there at the past 4 trading days, and now today, with this market unable to rally above the Tenkan-sen, the buyers unable to show any solidly bullish activity above the Tenkan-sen, it's little wonder that we saw the market sell off in a very decisive manner today. As I've mentioned, however, we are still bullish in the higher time frames, so we would expect that this market may find support anywhere through here. We do have solid support all the way down through to the top of the cloud, which extends down to about 1350 now. But with the solid bearishness in this market, we should see it test down to lower levels. But as I've mentioned, very solid support all the way down through to this swing high at around the 1392, 1391 area.